Hey everyone, welcome back to Corporate Decoder. Today MYXXU just filed a Form 8K announcing the separate trading of its units, and I am seeing a potential trading opportunity that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about giving investors the ability to trade the underlying pieces of their offering separately, which could unlock some interesting price discovery. So Maywood Acquisition Corp 2, which we all know as MYXXU, or more specifically the unit's ticker MYXXU, has announced a significant development starting around May 15, 2026. Investors will be able to buy and sell the Class A ordinary shares, the rights, and the warrants that are currently bundled together in the company's units separately. Think of it this way, the units MYXXU were like a combo meal. You bought the whole thing. Now the company is saying, go ahead, you can buy just the fries, just the burger, or just the drink. They are decoupling the individual components. The units themselves, MYXXU, will continue to trade on the Nasdaq, but the parts inside, they're getting their own tickers. The Class A ordinary shares will trade under MY. The rights will trade under MYXXX, and the redeemable warrants will trade under MYXXU. This is a pretty standard move for special purpose acquisition companies or SPACs. Often the units are offered first, and then after a short period, the components can be traded independently. And it looks like MYXXU is an emerging growth company. This mostly means they have some flexibility in their reporting and compliance requirements compared to larger, more established companies. The key takeaway from this filing is all about flexibility and potential arbitrage. When these components start trading separately, the market will finally be able to assign individual values to each part of the MYXXU unit. Sometimes the sum of the parts can be greater than the whole. For example, if the market perceives the underlying shares MYX to be undervalued, or the warrants MYXXU to have significant upside potential, investors might buy the individual components even if the unit price is higher. Conversely, if one component is overvalued, it might drag the unit price down. This separation allows for much finer price discovery and, in some cases, can lead to trading opportunities if the market misprices the individual pieces relative to the bundled unit. It is similar to how a retailer might offer a bundled deal, but then also sell each item separately. Consumers can then decide if buying individually is a better deal for them based on current pricing. The company is also pointing to a press release as Exhibit 99.1, which usually contains more color on the announcement. But the core of this 8K is this separation of trading. This filing doesn't delve into deep financial numbers like a quarterly report, but it is a crucial step for a SPAC. It signals that the company is moving further down its path, transitioning from its initial public offering phase towards eventually finding and merging with an operating business. The ability to trade these components separately is a sign of a maturing market for the company's securities. Essentially, this filing is the operational detail that allows the market to start valuing each stock, right, and warrant individually. It's a prerequisite for any potential future trading strategies based on the perceived value of each specific security. Looking at the broader context, SPACs like MYXXU are designed to bring private companies public faster, and this step of detaching the units is a normal part of that process. This move could potentially lead to increased trading volume and liquidity for the individual securities. Now, what does this mean for investors? For those who bought the units, they now have more options. They can hold onto the combined unit, or they can choose to separate and sell some or all of the individual shares, rights, or warrants. For new investors, they can now target specific components if they believe one part of the offering has more potential than others. The fact that these will trade on the Nasdaq, a major exchange, means they will be subject to clear market forces and transparency. This is generally a good thing for investors compared to the often opaque over-the-counter markets. The true story here isn't about stunning financial performance in this specific filing, because that's not what this 8K is about. It is about the market's ability to finally begin pricing these distinct assets. We will be watching closely to see how the individual prices of MYX, MYXXU, and MYXXU fluctuate once they are trading independently, and if the sum of their parts begins to trade at a premium or discount to where the units MYXXU were trading. This event can sometimes be a catalyst for price movement, as investors and traders react to the new trading dynamics. It's also a signal that MYXXU is progressing towards its goal of a business combination. The risk I am watching is that sometimes after separation, the individual components can underperform if the SPAC doesn't announce a compelling merger target. The warrants in particular can become almost worthless if the stock price doesn't rise significantly before their expiration. What I am actually looking for is how the market prices these individual components and if that pricing creates any immediate arbitrage opportunities or signals confidence in the company's future prospects. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like and subscribe. And join our Discord community for more discussions.